The U.S. dollar is higher after the EU and U.S. agreed to at least a framework, it seems, of a trade deal, 15% tariffs on goods with lots of details within that framework. Nevertheless, we are seeing the U.S. dollar move sharply to the upside against all the major currency pairs. In this video, I'll take a look at three of those: the euro versus U.S. dollar, the big mover today, the dollar versus yen, and the sterling versus U.S. dollar, all from a technical perspective. So let's get started. The euro versus U.S. dollar is one of the big movers today, with a move of 0.8% to the downside, pretty much after initial move to the upside. Off of the trade report, we did run into resistance here against a swing area and started to sell when we moved below the 100-hour moving average. We moved back below this swing area right through here. We moved below the 200-hour moving average and stayed below that level after breaking below that level. That's probably the key, and also below the 50% retracement. So I would say that the 50% in the 200-hour moving average is now risk for traders in this environment, and the bias has shifted back to the downside. The 50%, by the way, is of the move down from the July high to the July low. That is the midpoint, and oftentimes the traders use that as a barometer, as the apex of a seesaw or whatever. It's more bullish above, more bearish below, and that and the 200-hour moving average give the more bearish bias here. So this is going to be the risk level up here. Close risk level might be the broken 38.2% retracement of the same move to the downside. It comes in at 116.605. Because we are down at 10648. This is for more toward traders, and you can see how we broke below that and the corrective move to the upside is still stayed back off of that 60 level. On the downside, we have this swing area down through here to aspire toward. This area was defined by a number of different swing, mostly highs through here. We tried to break above it here, failed, and then use that level again as resistance here and found sellers again. But when we started to move back to the upside right through here after this minor correction through here, that's when we took off to the upside. We didn't return to that level until over here, where again we use this level more as as both a support and resistance level before moving to the upside through here. So this is going to be the next key target on the downside for the euro versus U.S. dollars. It retraces the gains that we've seen over the last week and a half or so of trading in that currency pair, with the high price coming in on Thursday of last week, which, by the way, also reached these highs right through here, and here. So that was a nice stall point right there into Friday's, the rest of Thursday's trade and into Friday, where we saw the price move lower into swing area, back higher, and then back lower and trading here today. Let's take a look at the dollar versus yen next, and this currency pair. I'm going to start by taking a look at the hourly chart. Why? Because I want to focus initially on what happened right through here in trading on Friday's trade on the hourly chart. We came down to the 100-bar moving average on the 4-hour chart, the 100-hour moving average. Those two moving averages found support buyers, and we pushed to the upside through here. And at that move higher, we did trade above and below the 200-hour moving average before breaking to the upside and trading here today with the overall dollar buying. That move to the upside did initially find resistance right here, which was this lone swing high right here, which sent the price sharply to the downside. We did trade above and below that area through here, trying to at least find resistance right through here and here and here against that level. But breaking above and trading here today, that's going to be our close risk level at 148.01. Let's call it 148, nice round number. And our next target on the top side comes up here between 148.56 and 148.72. Now, why is this level so important? It doesn't look like it through here, where we had just this whole chopping up and down. And I have to go to the 4-hour chart to show you why that level is of somewhat importance to me from a technical perspective. And you go back to this period right through here, where we had swing lows coming through here, finding support. Trade above and below the level right here, and then reestablish a support here, here, and here before breaking to the downside. We came back up to that level here, which is the June 2025 high price, and then we had this chop above the level, above and below it, and trading not last week but the week before. So be aware of that area right through here as a next key target on the top side to get to and through. If we do get above that level, then we look toward the high price that we saw in just 2 weeks ago at the 149.18 level, and then we start to focus on the 200-day moving average. That's a green line in the chart right through here. Finally, let's take a look at the sterling versus US dollar. We'll focus on the hourly chart here. You can see that the move to the downside was started again like on Thursday, where the price came into the 50% of the July trading range right through here, and also the swing area right through here. Found willing sellers, fell below that level, and started its rotation back to the downside. We came down to the 100-hour moving average late Thursday, and Friday we fell below that level, fell below the 200-hour moving average, continued to decline all the way down through here. We had that weaker data come out of the UK, which kind of helped things along on Friday. In trading here today, we came up into this swing area through here between the 134.48 and 134.75. Level is defined by, again, a number of different swing lows and swing highs going back in time. Time outlined some of those levels through here. This one led to the move higher. This one moved to higher. We came back down below. It went lower. Traded above and below through here before finally deciding to the upside through here. We didn't return back to that level until here. You can see the number of different times the price came into that level. Either as support or resistance, even over the last step. This is the hourly chart, so the last couple of weeks of trading. And now we're going to use this area as resistance. Here, 134.48, 134.75 with the 200-hour moving average of 134.66 in between. Can't move above those levels. If you do, then the bias to the downside starts to weaken. But right now, the sellers are more in control. And we look down toward this swing area down here, which also has a pretty solid level of support through here, and here, all providing this floor right here. So this area down here between 133.61 and 133.78 is our next key target on the downside for the sterling versus US dollar. So the dollar is stronger. We'll see how that plays out in the North American session here today. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.